Hello, good morning, and welcome to today's morning report with me, Richard Perry, market analyst at Antech Markets, for Friday, the 25th of April. The moves that we've seen overnight in Asia have been fairly mixed, actually. The geopolitical tensions in Russia continue to dominate, and certainly yesterday afternoon they were ramped up by rumours of a possible press conference, an emergency press conference given by Putin that actually ultimately didn't turn out to be the case. But certainly it seems that Russia is now beginning to build up military forces on the Ukrainian border to engage in military exercises, which suggests that they're beginning to flex their muscles and sort of produce a little bit more tension surrounding the issue. And that certainly has hit markets today. European markets are quite lower. The DAX continues to badly underperform when the geopolitical tensions arise and flare up. And certainly that was the case yesterday. And into today as well. So just bear that one in mind, that the DAX is underperforming when these geopolitical tensions do tend to surface once more. In the forex markets this morning, not a huge amount of movement. The euro is very slightly stronger, but generally speaking, the forex markets are quite flat and not really reacting quite yet. The gold price is trading around flat as well. It had a big spike to the upside yesterday afternoon as the geopolitical tensions, as I said earlier, began to sort of increase once more. So gold is still trading on that news as well. So that's slightly pretty much trading around flat, as I said early today. The key events that we need to be looking out for. So I'll just give you a quick look at the dollar index, very slightly lower, and it continues to fall away following on from that rally that we had in the last week or so. Last few days it's been in decline, so we need to be just mindful of that, and that seems to be the case early with a little bit of euro strength today. The key events overnight, certainly the Japanese inflation figure came in pretty much bang in line at 1.6%, but all other aspects of that inflation report were slightly weaker, so there is a possibility, and certainly there was a little bit of speculation overnight that perhaps this could lead to a further engagement of quantitative easing, but it's certainly not really had any sort of reaction quite yet in the yen. In fact, a very slight bit of yen strength early on today. This morning, the traders will be certainly focusing on retail sales for the UK. Retail sales expected to come in at 3.8%. That's up from 3.6% last month. And certainly, you would say that retail sales in the UK are trading around these 5-year highs now. So that's a very strong lead from the retail sector in the UK. The retail sector, or certainly the services sector in the UK, is around about 3/4 of the economy, so that is an important number for the UK, these retail sales, and being a consumer-driven economy, that certainly has a bearing on GDP. And that's out at 9:30 this morning, so 3.8% expected there. Into the afternoon, the US trading, we're looking at the Michigan sentiment, the final reading of Michigan sentiment. The last reading was, or the initial reading was 82.6. It's expected to come out at 83, just a very slight improvement on that. But certainly, again, the Michigan sentiment is steadily improving. You can see this move above 80 and these upper levels that we'd seen back in the late 2000s, so not seen since 2008. So if it comes back to 83, that's not too far away from that 85.1 high that we saw in July last year. So certainly improving stats there on the Michigan sentiment. So my chart of the day is the S&P 500. S&P has actually in the last couple of days just struggled really. That despite that impressive results that came out from Facebook and Apple yesterday, the S&P didn't really push on from that, and certainly was impacted by the geopolitical tensions, and that comes on the back of 6 straight days higher. And we've had a couple of negative candles in a row now on the S&P, and that begins to question as to whether there could be a correction on the horizon. It may well be happening. You've got these momentum indicators that just sort of losing the upside impetus now, and you could well be seeing the beginning of possibly a consolidation period or even a correction. So moving intraday, you can see this. You had a move back to 1870, which was the low yesterday. It slightly bounced, but certainly that is the basis of support around 1870, which was sort of around about where those breakout highs were of that reaction back in earlier in the month. If that 1870 level breaks, you're going to be retesting this 1863. And I think if that were to break, that would confirm that we're in correction mode, and you could see us back down into this 1840 to 1850 area, which is 1840 certainly is a band of support. But up towards 1850, which is also a level of support as well. So that is a decent area for the S&P to correct back into if this correction does take hold. But 1870 is the first line, and then 1863 following on from that. If it were to break above the reaction high, although the futures are certainly the European markets are suggesting that we're going to have a bit of weakness at the open today. Then the all-time high is at 1897 still, and that would be opened if we could move above that 1884, 1885 area, which was yesterday's high. The momentum indicators certainly on the intraday level are, this is on the hourly chart, fairly corrective actually. It's sort of rolled over, you could argue. Certainly the MACD lines are sort of suggesting we're on a bit of a slide backwards, and I think pressure could well be seen on that 1870 mark today. Okay, so I wish you good luck in your trading on the S&P 500, and I will speak to you later. Thank you.